Cold open. Berkshire Hathaway is famous for patience. But the company is now spending again, and that makes the succession story real. Under Abel, Berkshire increased its alphabet exposure, added or expanded housing-related positions, and used billions for buybacks. On paper, this looks like confidence. But strategically, it raises a more interesting question. What happens to a wealth machine when the founder's restraint is no longer the main force in the room? Buffett's model was not simply buying good companies. It was waiting until price, quality, cash, and temperament aligned. That patience became part of Berkshire's brand. Investors trusted the company not to do something just because cash was available. Abel now faces the opposite pressure. If he does nothing, investors ask whether Berkshire can still compound. If he acts too quickly, they ask whether the discipline has changed. That is the succession trap. The alphabet move is especially symbolic. It keeps Berkshire close to a dominant business, but also ties more capital to the AI infrastructure cycle. The homebuilder exposure adds another signal. Berkshire may be looking for durable real economy demand, while markets debate rates and housing supply. The wealth code here is not one stock, it is governance. Can a capital allocation culture survive when the iconic allocator is no longer CEO? That is why Berkshire after Buffett is one of the most important business experiments in the world. The question is not whether Abel can spend money. The question is whether he can preserve the patience that made the money powerful.